Another rough session of trade today. The fact that we fell below the 600 mark when it came to the Sensex, or for that matter, that near 200 point slide that we saw for the Nifty. The picture, to be fair, wasn't all that bad when we actually walked into trade. We were holding okay, just mild negatives is what we were seeing on the screen. And then the European markets opened with deep gashes for themselves. About 2.5 to about 3.25%. Yes, 3.25% was the kind of slide that you saw on the FTSE, the CAC, as well as the DAX, on concerns around a second wave of the virus. So we were just aligning ourselves, to be fair, with the rest of the globe today, and that perhaps explains that 11,700 tick that you saw on the Nifty today. All sectors, having said that, have bled in trade today. I can't spot a single green on the screen when it comes to the sectoral indexes. Real estate taking a sharp knock of about 3.5%, a downtick coming in at the sector weightage within the F&O universe. Automobiles, banks, Capco, cement, FMCG, IT, pharmaceuticals, all of them were bleeding, as was the case with the broader markets as well. Quite a dismal breath as soon as we began our weakness. And on closing, you've just had 18 names or 18 stocks standing to the green lines within the F&O universe. Just a handful of movers, so I'll cover that first. Bharti, of course, reacted positively to its numbers. A gap up start and managed to latch onto that gap. That really was the key takeaway today. You also had an RBL Bank, a UPL, a Marico, Siemens, and that Route Mobile, the new listing, that managed to impress the street with its earnings and sprung up a good 10% after its numbers came out. And now to the long list of losers. Many over there, starting off with an HDFC, which was down 3.6% in the futures within the Nifty, IndusInd Bank, Dr. Reddy's, Tech Mahindra, ICICI Bank, Shree Cement, Bajaj Finance, Hindalco, Ultratech Cement, SBI, Tata Steel. I can go on counting the list of losers. While today we've aligned ourselves with the rest of the globe, but like I've been pointing out on a daily basis, this volatility only is going to get heightened as we approach closer to the big event. That's the US presidential elections. A lot of talk about what's going to happen, whether it's going to be red or a blue win. And the global markets are definitely edgy. That and the COVID second wave as well seems to be making the market a lot nervous. So the clear mantra in the market right now is that of capital protection. Don't try and trade this chop and churn, because it could get you battered any which way. For most long-term investors that we've been chatting with, the market participants on the channel, they seem to be though indicating that you very well could keep your shopping list and buying list ready, because a furthermore decline is only going to get stocks to an attractive price, which could be a good long-term buying opportunity. So yes, banks is really turning out to be as a big winner when it comes to long-term buys. Remember, banks have underperformed year to date, or for that matter even from the March lows, and that's where all the contra calls in the market are being witnessed. Remember, the bank outperformance is just very nascent. You still haven't seen a big catch-up play out, and yes, the earnings in bits and starts seem to be impressive. So be it an HDFC Bank or what we heard from a Kotak Bank today, later in the day you're going to hear out from an Axis Bank as well. So amidst earnings, keep your lookout for where exactly do you find a mismatch between what the stock price is and what the management commentaries are indicating, because that's where you can spot your next opportunity.